Good morning, ladies and gentlemen, and welcome to the show on this Wednesday, the 8th of September, 2021. Thank you for tuning in. Glad to have you guys here. Now, what we're going to talk about this morning is, first off, the United States debt ceiling. Far from being resolved, it's moving closer to October. And in October, they run out of money. So, we could see some fireworks from that situation. Let's start the charts right here and take a look at this. The Chinese contagion within the Chinese because of this Evergrande company. They're having trouble right now. This is very, oh my goodness, I can't tell you guys how closely this resembles to the 2008 crisis that we had in the United States of America with Lehman Brothers going down. It's markedly similar, right? And now, right now, it's starting to widen. This thing's starting to widen. It's starting to grow. It's described as contagion. It says another day, another dismal development for China's Lehman. What they're calling it China's Lehman is it's so much like Lehman Brothers, what happened in 2008. And it's extending into the Chinese property market right now. The contagion is slamming the Chinese property market right now. Bloomberg reported that just hours after Fitch joined Moody's in a triple-notch downgrade of China's property development giant, coupled with a warning that default appears probable, dollar bonds of China's Evergrande fell to fresh lows after a report from financial intelligence from Red that the firm plans to suspend interest payments on loans from two banks due September 21st and asked the lender to wait for instructions about an extended plan. There's a word for this. It's called a technical default or a selective default. In the parlance of rating agencies, it occurs when a borrower fails to pay one or more of their obligations but continues to meet other payment obligations and usually precedes a full-blown default and or bankruptcy. Although in China, the distinction tends to be a little bit blurry, it says here. Following the news, Evergrande's dollar bond due 2025 fell 1.5 cents from the dollar to 24.2 cents, with all other U.S. bonds sliding in sympathy. So what we got here is a situation that's growing in China. This is the way these things happen, you know. They start small. It's like a tear in the fabric, you know. Picture the financial system like a fabric, you know, like maybe a trampoline might be a good example, you know. There's a tiny little tear comes, and then it busts into a big hole, right? That's the way this works. But it takes time. It's not within the financial system when they get a rupture or a tear like this. It's not something that just boom and there it grows into a full-blown hole. It takes time. It takes generally months. Like the Lehman crisis took a long time. But at the end, in the end part of this, it just explodes. It's just like they said during Lehman, you know, that back in 2008, that if they hadn't have stepped in, that the whole world's financial system would have collapsed. And they came within a matter of hours of that happening. It's a very dangerous situation, what's happening with this Evergrande over in China right now and their bonds, which have been suspended from trading following a liquidation scramble. So right now we got a big tear in the financial system, and it's beginning over in China. Let's take a look now at silver today. Silver today is off 39 cents. And gold too, you know, are off today. They're going down in price. Let's take a look at gold. Gold today is down $7.20 to $17.86. Taking an awful beating. The dollar's been going up the last number of days, last couple days. We see bond yields starting to rise a little bit. Now today they're falling off just a little bit, but the situation on the ground out there is that the deflationists for months now have been saying that bond yields are gonna go up, and the dollar's gonna go up, and everything else is gonna go down. Well, there is a little bit of deflation. It's not deflation in this part of the system where we have the inflation going on in the general economy with prices rising and everything. Consumer price inflation has no effect upon that whatsoever. The deflation or disinflation that we've got in the system right now is in the upper parts of the financial system, where basically all of that stimmy that came and all that money and all that quantitative easing and everything else, our financial system has become a sieve. It's like a net with a whole bunch of holes in it. You throw the water on, the water goes right down through the holes. You know, the water being money or liquidity. When they dumped all this liquidity into the system, I thought for sure it would last into 2022 before it would run out. It's worse than I thought. So they can't afford to let this system completely collapse. We got these things going on, like Evergrande over there in China, you know, debt ceiling here, liquidation running out of liquidation, a crunch in liquidity. We got markets starting to roll over right now. They're just beginning to roll over. And everything is being carried downwards. There's a couple things that could happen from this. One is the Fed doesn't react to it. And they don't react to it. And we see, in that case, what we would see is things continue to slide or slide downwards to a certain point where fear starts to enter into the markets. And then we'll see a change in the direction of the gold and silver trade, because gold and silver, both of them, were monetary assets. Silver, up until quite recently, was a monetary asset. And it'll go back to being a monetary asset. Gold is definitively in the asset class of being a monetary asset because it's counted as a tier 1 asset under the new rules of Basel III. So we'll see a change in direction for these metals at a certain point, and a fear trade could very well come in, and that can be rather explosive to the upside. Not like what we've seen. You know, we've seen a slow rise in price in gold and silver, and then smash downs continuing. Let's go over to cryptos. We see these smash downs continuing, where they're trading the paper derivatives product, and they're actually lowering the price on gold and silver. A fear trade could bust that all to pieces. We got Bitcoin at 2064, so it's taking a smash too. 45,878 for Bitcoin. Yeah. Bitcoin's been knocked down a peg. We have to wait and see what happens, you know, but boy, there's a lot going on in the financial system right now. Let's take a look at the Dow Jones today. And it's down 94 points. For now, in the short term. Short-term outlook for the Dow is it's going to continue to remain bearish until something snaps within this financial system. And I'll tell you what I think is going to snap is I think we're going to start to deflate. And then the central banks are going to have to come in and print a whole bunch more money to bring us out of the deflation. They can't let the system collapse. They would lose their power base. So they got to keep this menagerie going right up until the time they do a reset. Yeah, they're going to do a reset. They're going to devalue the dollar first, so. And when the dollar devaluation is done, then they're going to reset into something new. And it'll be a surprise, but I'll tell you where I think it's going is central bank digital currency. I think that's where all this is headed, ultimately in the end. And we're going to be forced, well, they are going to be let's put it this way, they're going to make it seem like they're forced to do it. this is all part of the reason why they're going to let it collapse somewhat. It's a controlled demolition. And during that demolition, guys, that's going to give them the reason to do the reset. See, they just can't do the reset right now. They have to have a problem in order to fix it. Problem, reaction, solution. So that's what's being played out here. Is the problem is this crisis is starting now with the Chinese Lehman, which will probably, the contagion will probably spread. And it'll probably start to take down the markets over here. And this is the same game they played in 2008. And it leads to more and more modern monetary theory and control over the money. Ultimately, that'll lead to a final conclusion, which will be your reset. And your central bank digital currencies will then come flooding in. That's where I see it all going. Central bank digital currencies. That's where it's heading. Let's take a look now at the oil. Oil's the only thing that's up today. That and the dollar. Oil's up $1. 69.35 today. Move index today. We're looking at the move index at 57.05. It's down 8% on the day so far. Now we're going to check bonds and rates, and we're looking at falling yields, but see, it's not as big as what we've seen in the yields rising. So they rose more substantially than they're falling today. We're looking at a U.S. 10-year at 1.35. It's 1.8 basis points. It's fell. We're looking at a 30-year at 1.96, and it's fell 1.8 basis points. And now we're going to take a look at the U.S. dollar index today, and it's rising quite steeply today. It's at 92.83. It's been rising all day yesterday, and all day today, having a very negative effect upon gold and silver. I would say that there's a time coming very, very soon. If you want silver, you're going to get locked out of the real product, real physical product. You're not going to be able to buy it. I think that time is approaching. I don't think it's very far away. I can't see in their warehouses, but I think they're running empty. They just can't sustain. There's not enough. They were just having enough silver there for years before COVID to supply the industrial demand and supply coin and bar demand. And now what's happening is bar and coin demand has increased significantly since then, when they just was having just enough silver to supply it then. Industry's taking around the same, as they always took, and what's happening is they're going to have in other words, they're eating more of the pie than there's pie available to eat. And so they're going to have a little deficit every year that they're going to have to fill because of bar and coin demand increasing. And nobody is selling their silver back in that they've bought. So it's all down to mining supply. And how much do they got left in inventories that they're dipping into to cover that? You can't see that aspect of it. But I think they're running on vapors right now. In fact, they might be using up mining supply for next year or something. You know what I mean? But I think they're running on vapors right now. And any little shock to this market where people are going to run in and buy silver, it's going to be all gone. Or if we see the richer people have more money, start to want to allocate some and bigger purchases, they're just going to clean it all out. And so that snap, all of a sudden snap, where people are going to want to run into silver as a means to, they're going to break the market. And what I mean by break the market is I mean they run out of physical supply. That's the market's broke. When you can't buy any real physical silver, the market's broke. Thank you guys for listening. Like and subscribe, and we'll catch you guys in the very next show. Bye-bye.